Good morning, students, and let's discuss the second and the last class on Ind AS 105, non-current assets held for sale and discontinued operations. So, students, just day before yesterday, we have discussed few concepts of Ind AS 105. So, in the next 10 minutes, I will recap the entire first class. Then I'll come to the concepts which is going to be covered in today's class, right? So in the first class, we understood that what will be covered under this particular standard. Then we discussed this standard talks about non-current assets held for sale, right? Normally, the assets which are held for sale in the ordinary course of business, those are not classified as non-current, those are classified as current. For example, inventory, right? So normally non-current assets like PPE, which is your property, plant and equipment, intangible asset, investment property, biological assets, right? So these kind of items, these items are generally non-current in nature, right? And if the entity wants to sell these items, then it will move out of their basic standard. It will move out of Ind AS 16, Ind AS 38, Ind AS 40, Ind AS 41, right? And it will move to Ind AS 105, right? Because when you have decided to sell a non-current asset, because by the nature, non-current asset is not meant for sale, but you have decided for sale, right? In that case, the accounting treatment would be different. In that case, the measurement would be different. The presentation is required. Some disclosures are required, right? And that is why this separate standard is there. Globally, IFRS 5 is there. If you are appearing for GFRS paper, then IFRS 5 is there. In India, Ind AS 105 is there. In accounting standard, AS 24 was there, which was talking about discontinuing operations. And the non-current assets held for sale aspect has been covered under AS 10 and AS 26. So this standard talks about non-current asset held for sale and discontinued operations, right? What is a non-current asset held for sale? Non-current asset held for sale are those items where the carrying amount is principally recovered through a sale transaction rather than through continuing use, right? Because the intent is not to use, not to further use, right? The intent is to sell. And we have discussed that the condition for classifying an item as a held for sale, it is available, immediately available for sale, available for immediate sale in present condition, right? If buyer will come to me right away, I am able to sell it right away, subject to some time which is usual and customary, right? So in this standard, we will be talking about three key terms: non-current assets held for sale. When I'm saying non-current asset held for sale, it is more of your individual asset for sale, right? Second, we will be talking about disposal group. Disposal group is like a cash generating unit. Disposal group is like a group of assets. And you remember, I have taken an example of a factory, right? So disposal group is a group of assets where non-current asset would be there as well as current asset may be there. Okay. But yes, in disposal group, one non-current asset is mandatory. If there is no non-current asset in disposal group, that group will not be covered under Ind AS 105, right? So at least one asset should be a non-current asset in the disposal group, right? So in disposal group, that is a group of asset held for sale, right? And it includes current asset as well. It includes liabilities as well. Okay. And you remember in Hindalco Industries balance sheet, I have shown you the disposal group held for sale and liabilities associated with disposal group held for sale. And we have done one case study also in my PowerPoint presentation, right? Then the third concept is discontinued operations, right? So we will be discussing about discontinuing operations today. Now the question arises, when a non-current asset will be classified as held for sale and will be covered under Ind AS 105. Non-current asset will be classified as held for sale and will be covered under Ind AS 105 if two conditions will be satisfied. Sir, what are those two conditions? What are those two conditions? Those two conditions are, what are those two conditions? Manini, Rashmi, Rohan, Radhika. What are those two conditions? Rahul is saying ISPC and HP. Yes, what is meant by ISPC? It is available for immediate sale in present condition. Available for immediate sale in present condition. And sale is highly probable. The first condition shows that the asset is available for immediate sale. This condition shows the availability for sale. The availability of asset for sale. Right? Clear? This availability is depending on the intention and ability. Intention and ability, right? We talked about this thing. And sale is highly probable. Sale is highly probable. The sale is highly probable. This talks about the efforts, the documentation regarding the completion of the sale, right? So if these two conditions will be satisfied, this is the classification criteria ISPC plus HP. This is and, right? ISPC and HP, okay? And what is meant by sale is highly probable when 5 conditions will be satisfied. What is the 5 condition? First, the management should be committed, right? It should be documented in the board minutes. The management has already passed a resolution for sale of these assets, right? Searching a buyer has already started. The price which has been quoted for sale of that asset is reasonable, right? The sale is likely to be complete within 1 year, okay? And it is unlikely that the plan of sale will change. Sir, can the plan may change? Yes, it may change, but it is unlikely, right? And one of the student has also asked, sir, if the plan will change, then what will be the accounting? We are going to discuss about this aspect, okay, today. Sir, is there any exception to 1 year rule? We have discussed that there is an exception to 1 year rule also. If the sale extends beyond 1 year, due to the circumstances beyond entity's control. Sir, what could be those circumstances beyond entity's control? For example, if the buyer or third party has imposed some conditions, right? Or there are some uncertain circumstances like natural calamities, right? Like COVID, right? So these are something which is beyond entity's control, provided there must be a binding agreement which must be there, right? A binding agreement must be there. Sir, if a binding agreement is not there and there are some circumstances beyond entity's control, then in that case there is no exception to 1 year rule. For example, I am a seller and I have already entered into a contract to sell my property with two Manini, right? And this is a firm purchase commitment. I mean to say binding contract, right? And let's say after 1 month, when I was supposed to transfer the ownership of the property, COVID came and there was a national lockdown for 3 months, right? So in this case, the two conditions are meeting. What are the two conditions? First, this is something which is beyond my control, right? Second, there is already a binding agreement lying between me and Manini, okay? So in this case, even though if it will extend beyond 1 year, right? If it will extend beyond 1 year, still I will classify that asset as non-current asset held for sale, okay? Right? You guys have understood that. You guys have also understood that why it is important to meet these conditions, because whenever you are saying that, sir, this building is classified as a non-current asset held for sale, no more it will be non-current, it will become current. Why? Because the intent is to sell. And you can look at the condition also. It is talking about available for immediate sale in the present condition, right? And we have discussed so many examples to understand this concept, right? Then let's come to the measurement. Now we have decided that yes, this item is a non-current asset held for sale. Now, what is the measurement requirement? Is it something different, or whatever carrying value is there, we will just, recognize non-current asset held for sale on the carrying value? Answer is no. There is a different requirement. What is a different requirement? Since this asset is classified as held for sale, right? So first thing, the moment you are classifying that asset as held for sale, and let me take the example of PP. Normally in 95% cases, normally it will be PP, okay? So if an item which is classified as held for sale, right? It is important to find out what is the carrying value on the date of classification as per the respective standard. Why, sir? Because this is the date when this standard is moving from, this asset is moving from Ind AS 16 to Ind AS 105. So first of all, let's find out what is the carrying value on the date of classification H per respective Ind AS, for example, Ind AS 16. Sir, what is meant by carrying value? Very simple. Carrying value is equal to cost minus accumulated depreciation minus accumulated impairment losses, right? For every asset, you need to check the impairment. Sir, do we need to do this impairment exercise every year, every reporting date? Answer is no. For these kind of asset, I mean to say PPE, you need to see, is there any impairment indicator? If your business is growing well, you are earning profit, right? And there is no slowdown. Why to check impairment? There is no impairment. Your assets are revenue generating assets, right? But if your assets are lying idle, there is an impairment indicator H per Ind AS 36, and then you need to check the recoverable amount, right? And if your recoverable value is lower than the carrying value, of course, there is an impairment, right? So step number one, first step, you need to calculate the carrying value of non-current asset held for sale or disposal group on the date of classification as held for sale, H per the respective standard. For example, in Ind AS 16, Ind AS 38 talks about carrying value is equal to cost minus debt minus accumulated impairment losses. Second, you need to calculate the fair value less cost to sell on the date of classification. Whatever is lower, you need to recognize non-current asset held for sale at lower, right? For example, the carrying value comes out at 1 lakh rupees. The fair value less cost to sell is 80,000 rupees. You need to put an entry, you need to pass an entry, non-current asset held for sale account debit, right? Impairment loss on classification account debit, impairment loss on classification as HFS account debit to PPE account, right? 80,000, 20,000 and 1 lakh. Clear? I hope it is clear to all of you. Yes. Very good. Very good. Okay, sir. On the date of initial classification as held for sale, we have understood that this NCHFS has to be recognized at lower of carrying value and fair value less cost to sell. Carrying value has to be calculated as per the respective standard, right? And fair value less cost to sell has to be calculated as per this standard. And whatever is lower, we will recognize that. Whatever is difference is lower, then we need to recognize it as an impairment loss in P&L, not in OCI, in P&L. Okay, very fair. Sir, you have said that on the date of classification as held for sale, it will move out from the Ind AS 16, Ind AS 38. In that case, whether depreciation will continue, because it is available for immediate sale and sale is highly probable, and 1 year window is there for completing the sale. So for example, if we have classified this asset as held for sale on 1st July 2021, this asset has not been sold out on 31st March 22, right? Do we need to charge depreciation on that? Answer is no. As per Ind AS 105, no depreciation is required. Okay. Why? Your intent is to sell this. Sorry. Your intent is to sell this asset, right? So depreciation stopped, amortization stopped automatically once this asset has been classified as held for sale, right? Clear? Okay. Sir, what is the subsequent measurement? Initial measurement we have understood, right? Depreciation, amortization part we have understood. What is subsequent measurement? Again, if the asset has not been sold out on the reporting date, then it has to be subsequently remeasured at fair value less cost to sell, right? Since there is no concept of carrying value after that. Why? I mean to say carrying value as per respective standard. Why? Because now it is in the kitty of Ind AS 105, right? In that case, fair value less cost to sell has to be calculated. If fair value less cost to sell is lower, if fair value less cost to sell is subsequently lower, then this lower has to be recognized as impairment loss. If the fair value less cost to sell is higher than the value at which we have already recognized this NCHFS, in that case, you need to recognize the upper side. You need to recognize the increase in fair value less cost to sell only to the extent impairment loss you have recognized with respect to this asset. Please mind my word. I am saying that you need to recognize the upside of fair value less cost to sell only to the extent of impairment loss you have recognized in respect to this asset. When I'm talking about this asset, probably you have recognized an impairment loss under Ind AS 16 and you have recognized an impairment loss under Ind AS 105. So you need to see the cumulative impairment losses which you have recognized in Ind AS 16 as well as Ind AS 105. To that extent, you can recognize this gain, right? So it is considered as an impairment reversal. And I have also discussed 3 cases, right? These 3 cases I have discussed to make you guys clear about this. Sir, on the date of classification as HFS, if the sale is expected to complete beyond 1 year, then your cost to sell, because cost to sell is going to be incurred on the date of sale, right? So this cost to sell needs to be discounted at present value, right? So this is what we have discussed in the last class. And we have also discussed the concept of disposal group. In the concept of disposal group, again, as far as disposal group is concerned, again, we need to calculate the carrying value of items in the disposal group, right? And the carrying value needs to be checked, calculated as per the respective standard, right? Then we need to check the fair value less cost to sell of the disposal group. Then whatever is the impairment, we need to allocate the impairment on the assets lying in the disposal group. Sir, how to allocate the impairment? The impairment needs to be allocated as per Ind AS 36 impairment of asset standard. Sir, what it says that if the disposal group carry any goodwill, first you need to strike off the goodwill. Second, if still there is an impairment loss, that impairment loss has to be allocated pro rata on the remaining assets. But one thing you need to understand, for allocating the impairment loss on the remaining assets, if one asset has its individual fair value, right? So that asset's value should not be declined. That asset value should not be declined, right? By allocating this impairment loss in comparison to value, which is there for that asset, right? For example, financial asset. So financial asset is already at fair value. And when you are allocating the impairment loss, its value becomes lower than what it should be, right? So on financial asset, this impairment loss should not be allocated to make it lower than at what it is there, right? So this is a concept of Ind AS 36. This is what we have discussed in the last class. And in this 17 minutes, I have summarized the entire last class. Please let me know if you have any doubt, any questions so far, right? So I can see a lot of response from the students like Manini, Rashmi, Soham, Rahul, Rakesh, Radhika, Rohan, right? Great guys, very good. Now let's start the discussion on the current part, today's part, right? And what is today's part? So let's discuss about today's part. And I hope my PPT is visible now. This is what we have discussed yesterday, day before yesterday in the last class, right? And we have also discussed that current non-current classification is H per Ind AS 1, not H per Ind AS 105. Ind AS 105 only talks about whatever is already classified as non-current. And if it is meeting some conditions, then we will classify it as non-current asset held for sale under current asset category, right? So now discuss, sir. And of course, we have discussed the concept of abandoned asset also. What is abandoned asset? Abandoned assets are those assets that are temporary out of use, okay? Which are temporary out of use. Those assets needs to be considered as PP only, not as a Ind AS 105, right? Yes, so these case studies we have discussed. Now let's discuss the changes to a plan of sale. Sir, if there is a change in the plan of sale, then what will happen, right? Then what will happen, okay? And before that, let me show you one of the annual report relating to the disposal group held for sale, okay? And please confirm if you are able to, if my annual report is visible. I'm opening the annual report of Hindalco Industries Limited. Please confirm if it is visible. Yeah, so this is the balance sheet of Hindalco Industries Limited. And in the balance sheet, in the current assets category, you can see that non-current assets or disposal group classified as held for sale, right? So this is on the asset side. And on the liability side, they have also given a liabilities associated with disposal group classified as held for sale. And let's look at the note number 15. Let's look at the note number 15. And the amount is 119 crore for liability. And the amount is, let's say, for assets, the amount is 152 crores. For assets, amount is 152 crores. Okay. And we have also seen the accounting policy of non-current assets or disposal group held for sale. And this is your complete revision. The Hindalco Industries accounting policy on non-current assets held for sale and disposal group held for sale is your complete revision, right? Now let's go to your note number 15. And if you see the note number 15, you can see that asset or disposal group classified as held for sale. And there is a breakup of 152 crores. What is the breakup? A, non-current asset classified as held for sale, individual asset, right, which is 41 crore. And what is the note given for individual asset? As on 31st March 21, this is a 31st March 21 balance sheet. Asset held for sale relates to one of the hydroelectric power generation facilities in the South America. This is a factory, right? Hydroelectric power generation facilities. It is a plant and machinery. Brecha, right? South America, Brecha. Land and building of Bin Duong plant in Vietnam. So one is your plant and machinery. The second one is land and building. And the third one is land in Ludenschild, Germany, right? So these are three individual assets, right? Three different assets at different locations, right? So this is considered as non-current asset held for sale. Second one is asset of disposal group classified as held for sale. It is 111 crores. And you can see that for assets and disposal group classified as held for sale, there is a land and building, right? This is a combination. This is a group. One is land and building, then plant and equipment, then other assets, then your other assets. 107. And there is number 1. Note number 1 is given, right? So there are three kind of assets. Land and building, major asset, plant and machinery, major asset, and other assets. Okay. And what is given in the note? Let's see the note now. Number 1, current year amount represents assets of discontinued operation classified as held for sale, right? And this disposal group classified as held for sale also represent that it is the discontinued operations. We will be talking about this. Okay. During the current year, the group has recognized impairment loss of 25 crore on assets which are held for disposal. What is this? This is the difference between carrying value as per the respective standard and fair value less cost to sell, right? So when these assets have been classified as non-current asset held for sale, there is an impairment loss of 25 crore to be shown there is an impairment loss of 25 crore which have been recognized as an impairment loss. So one of the student was asking in the last class, sir, whether this impairment loss needs to be disclosed separately. Answer is yes, it should be, right? So that user of the financial statement will be able to understand that yes, this is the amount which have been recognized as an impairment on account of change in classification, right? Friends, note number 3, please see this note. During the year, the group, based on future utilization plan, has reclassified, please see this word, has reclassified certain assets to property, plant and equipment which were kept as asset of disposal group held for sale. What is this? What is this, friends? Please tell me, what is this third note? During the year, the group, based on future utilization plan, has reclassified certain assets to PPE which were kept as asset held for sale. It means there is a change of plan. There is a change of plan. Okay. Sir, in case of change of plan, what is the accounting treatment? Right? Is it clear? And then there is a liability associated with disposal group classified as held for sale, which is 119 crore. Right? So let's go to the presentation now. Are you guys comfortable so far? Yeah. So I've also revised this entire day one. Yes, Soham, you're right. They were HFS first, now taken back to PP. So they were PP, then HFS, then again PP. Soham is asking, sir, what is the notion behind writing of goodwill first in the CGU or in the disposal group and then others? Soham, what is a goodwill? Goodwill is a fictitious asset, right? Goodwill is a reputation. It is a reputation. It is an image, right? So if let's say there is a business and the business has a good reputation, in that case the value of that business will grow. That business has a potential. But if the value is declined, what does it mean? The business has recognized an asset which is a goodwill, and if the value is getting down, the value has declined, in that case you cannot say that. In that case you cannot say that, sir, still I'm having a good reputation, still I'm having a goodwill, right? So since goodwill is kind of an asset which is fictitious asset, right? In that case, if the value is getting down, if there is an impairment, it means first you need to hit the goodwill, right? Then you need to hit the other assets. The other assets are actual assets, right? But goodwill is something which you have recognized just looking at the potential of the business, right? And that is why it is the asset which has to be taken care at the first place while writing of the impairment, right? Yeah. Now let's discuss the changes to a plan of sale. For example, there is an asset, right? There was a building. For example, there was a building. And this building was for business purposes. Building was for business purpose, right? So this building is classified as Ind AS 16. Now, after 1 year, the company has decided to sell this building, right? So now this building is classified as asset held for sale, Ind AS 104. Again after 1 year, the sale has picked up and there was a huge demand for the product in which the entity was dealing. For example, this entity was in the manufacturing of sanitizers, right? And this entity has 3 factory buildings. So prior to COVID, there was a very limited demand of the sanitizers, and this entity has decided to sell off one of the factory building, right? Because there was a very limited demand of sanitizers in India, right? Except hospitals or at specific places, no one was using sanitizers, right? So they have decided to sell off. And till the time this entity actually dispose of this asset, actually dispose of this factory or factory building, the COVID came. And in COVID, there was a high demand of sanitizers, and you have seen that there were a lot of companies. Dabur has started manufacturing sanitizers, right? Himalaya was already manufacturing sanitizers, but there are a lot of companies which have started manufacturing sanitizers, right? So looking at the COVID thing and demand of sanitizer, this company has dropped the plan of selling this factory building and decided to expand and decided to started the production in that factory building itself for sanitizer. The moment the plan has been changed, and again it should be documented, right? It's not be a verbal one. It's not like that Soham has went to an audit and the general manager has said that Soham, we have changed the plan. So Soham will not rely on the verbal discussion. He will ask, sir, where are the papers? What is the document? Where are the approvals? Right? It is not a simple thing. You are a listed company. It does not mean that yesterday you were saying that it is held for sale and it moved to held for sale. Now today you are saying no, we have changed the plan. So everything should be documented, right? Everything should be documented. So the moment the company has changed the plan, again it will go back to your Ind AS 16. It will go back to your Ind AS 16. Sir, when it was a building and it was used for business purposes, you have applied the principle of Ind AS 16 for initial recognition, subsequent recognition, depreciation, right? When it become held for sale, you have recognized, you have applied the principles of Ind AS 105. carrying value, fair value less cost to sell, then again remeasuring at fair value less cost to sell. So blah blah blah, you have recognized that, you have applied these principles of Ind AS 105. Again, when it will move to Ind AS 16, and probably there is a window of 1 year, for example. So after 1 year it was moved to held for sale, after 1 year it was again moved to PPE. So once it was classified as held for sale, for the last 1 year no depreciation was charged, no depreciation was charged, right? And if this asset would be in the kitty of Ind AS 16 earlier, this was in Ind AS 16 only, and if this would be in the Ind AS 16 kitty, there must be a depreciation which is going to be charged, because depreciation is required to be charged when the asset is available for sale. Simple. Doesn't matter, it is temporary, out of use, doesn't matter, but depreciation should be charged. So it means, sir, it means we have lost 1 year depreciation as well on this asset, right? So the question arises, at what value we will pass an accounting entry PP account debit to held for sale asset? PP account debit, credit, non-current asset held for sale. At what value, sir? At what value we need to pass this accounting entry? So standard says that when the held for sale criteria are no longer met, the asset should be removed from held for sale category. The asset should be removed from held for sale category, right? Okay, sir. Then you need to reclassify and remeasure at lower of. Again at this date, you need to reclassify from NCHFS to PPE. But at what value? At lower of what? Lower of carrying amount. If this asset was never classified as held for sale, this middle column should not be there, would not have been there. If this asset was never classified as held for sale, then what is the carrying value as on date? What is the carrying value on the date of classification? Carrying amount before the asset was classified as held for sale. Carrying amount before the asset was classified as held for sale, adjusted with depreciation, amortization, revaluation that would have been recognized had the asset not been classified as held for sale, right? If this asset would not have been classified as held for sale, then what will happen? In that case, you have to charge a depreciation for a year also, right? So you need to compute the carrying value considering this asset was never in the kitty of held for sale, right? Second, recoverable amount, sir. How this carrying amount will be calculated? This carrying amount will be calculated as per the respective standard, which is your Ind AS 16, 38, 40. Recoverable amount is calculated, which is as per Ind AS 36. Sir, what is meant by recoverable amount? Recoverable amount is higher of, please write down. Recoverable amount is higher of fair value less cost to sell and value in use. And value in use. Fair value less cost to sell and value in use, right? So what is fair value less cost to sell? You have to measure that. What is value in use? It is present value of future cash flows from the asset, right? So whatever is higher, it will be your recoverable amount. This is the concept under AS 28, which we have read in CA Inter. And your Ind AS 36 also says that recoverable amount is higher of fair value less cost to sell and value in use, right? So I'm not going to discuss this now, because you will read this concept in impairment of asset standard, right? But sir, at what value it is going to be again stated as PPE? It is going to be stated at PPE at lower of carrying amount and recoverable amount. Carrying amount and recoverable amount. Is it clear? Is it clear, friends? Carrying amount and recoverable amount. Okay. Very good. Now let's go to Excel file to again discuss this concept in detail. I hope this Excel file is visible to all of you. In case of change in plan of sale, the asset is going to be reclassified in the normal NCA category again. In case of change in plan of sale, the asset is going to be reclassified in the normal non-current asset category. Normal non-current asset category. For example, Ind AS 36, sorry, Ind AS 16, 38 and 40. 16 is PP, 38 is intangible asset, 40 is investment property, right? And now let's discuss this. For example, there was a machinery, and this machinery was recognized, treated as per Ind AS 16, right? And it was 1st April 2019. This machinery was purchased at 5 lakh rupees for 10 years. The life was 10 years. The cost was 5 lakh rupees. Life was 10 years, right? Clear? And there is no residual value assuming. After 1 year, this machine met the criteria of held for sale. What are the criteria? ISPC plus HP. So it has been classified as non-current asset held for sale. And now it was shifted from Ind AS 16 to Ind AS 105. Now the question came, sir, at what value we have to recognize this? We have to recognize it as lower of step 1 and step 2. Step 1 and step 2. What is step 1 and step 2? Lower of step 1 and step 2. What is your step 1 and step 2? Step 1 is your carrying value and step 2 is your step 1. Carrying value, step 2. Fair value less cost to sell. Fair value less cost to sell. This is your step 1 and step 2, right? This is what? Lower of carrying value and fair value less cost to sell. Is it clear? I hope it is clear to all of you, friends. Is it clear to all of you? Yeah. So on 31st March 20, it is classified as held for sale, right? Now, what is the carrying value as per step 1? What is the carrying value as per step 1? Tell me. What is the carrying value as per step 1? So the cost is 5 lakh rupees, right? Then your 1 year of depreciation. Depreciation for 1 year. What is the depreciation for 1 year? What is the depreciation for 1 year? Depreciation for 1 year is 50,000 rupees, right? Is divided by 10, 50,000 rupees. This is the depreciation for 1 year. Okay. Understood? So what is the carrying value as per step number 1? What is the carrying value? Carrying value is 4,50,000, right? Carrying value is 4,50,000. What is your step 2? Step 2 is fair value less cost to sell. It is, let's say, 4 lakh rupees, right? It is 4 lakh rupees. What is step 3? What is step 3? Step 3 is recognize NCHFS lower of what? Lower of step number 1 and step number 2. What is lower? Lower is 4 lakh. What is the accounting entry? What is the accounting entry, guys? What is your accounting entry? So accounting entry, right? And if it is 4 lakh rupees, then carrying value is 450. It is 4 lakh rupees. Lower is 4 lakh. You have to recognize NCHF at 4 lakh. What is the accounting entry? Machinery. Accounting entry is machinery, which is your NCHFS account debit. Machinery, NCHFS account debit, right? To machinery PPE account. Okay, this is credit. This is credit. So what is machinery NCHFS? It has to be recognized at 4 lakh. What is machinery PPE? It is 4,50,000. Difference will go to impairment loss account on change in classification, right? This is your 50,000. Clear? This will go to your P&L. Is it clear? Is it clear? This is your accounting entry at the time of classification as HFS. This is your accounting entry. Okay, sir, this we were already aware of. After on 31st March 20, this was classified as NCHFS. After 1 year, the plan has been changed. And as on 31st March 21, the plan has been changed. And again, this asset was moved from Ind AS 105 to Ind AS 16. So earlier it met the HFS criteria and it moved from Ind AS 16 to 105. Now it ceases. Now it ceases HFS criteria. Ceases means there is no HFS criteria. There is no is no sale, right? The companies don't want to sell it. Okay. So now it ceases to HFS criteria. So again, it will move to Ind AS 16 PPE, right? There is a change in plan of the sale of asset. If there is a change of plan, then what is the measurement requirement? Again, lower of step 1 and step 2. What is step 1? Carrying value on the date of change in plan. Had the asset never been classified as HFS? If this asset would never be classified as HFS, then what is the carrying value? Friends, on 31st March 21, tell me what is the carrying value if this asset has never been classified as held for sale? Step number 1. Your step number 1 is you need to compute carrying value. Compute carrying value considering machine is PPE since beginning, right? It never went to HFS, right? So compute carrying value. How you will compute the carrying value? Again, simple, very simple. Cost. What is your cost? Sir, cost is 5 lakh rupees. Okay. Then depreciation. Depreciation for which period? 2019-20. What is depreciation for 1920? 50,000. Again, if this was not classified as held for sale, then depreciation for 2021 was also going to be charged. That this depreciation also would have been charged. It is again 50,000. Now, what is the carrying value? What is the carrying value? Had this asset never been classified as held for sale, what is the carrying value? It is 4 lakh rupees, right? Your carrying value is 4 lakh. What is the step 2? Recoverable value on that date. Recoverable value on the date of change in plan. What is recoverable value? It is higher of value less cost to sell and value in use. Right. Step number 2. Compute recoverable value. Example, recoverable value is given in the question 3,80,000. Right. In this case, what is your step 3? Recognize at lower of. Recognize at lower of. Lower of what? Lower of carrying value had this asset never been classified as HFS and recoverable value. Sir, what is the accounting entry? Accounting entry at the time of change of plan. What is the accounting entry? See, when we have reclassified HFS, we have debited machinery NCHFS and credited machinery PP. But now again, when we are classifying it again back to reclassifying it back to PP, what will be the accounting entry? Machine PP account debit. Now machine PP account debit to machine NCHFS account. To machine NCHFS account. Machine PP account debit to machine NCHFS account, right? To machine NCHFS account. At what value machine PP should be debited? Tell me. Lower of 1 and 2. What is lower? 3,80,000 or 4 lakh? 380 or 4 lakh? 4 lakh. Sorry, 380. 380 na? 3,80,000. Machine PP will be debited by 3,80,000. Credit. What will be the credit? What will the credit? Sir, credit will be this value 4 lakh because your machine NCHFS is at 4 lakh rupees, right? Because it was recognized at lower of carrying value at that point of time and fair value less cost. Again, sir, whether we will debit depreciation or impairment loss, we have to debit impairment loss. Why? Because for 2021 entire year, this was never a PPA. This was a non-current asset held for sale, right? Hence, it will be impairment loss on reclassification. Friends, is it clear to all of you? Please tell me if it is clear to all of you. Or please let me know if you have any challenge, any problem, any doubt. Right? Please let me know. I have shown you this entire concept with the help of this entire life cycle from Ind AS 16 1052 in days 16 again, right? The steps, calculation, accounting entry, everything I have shown you, right? Let me know if you have any problem here, any doubt here. Very good. Thank you, Radhika. Thank you so much. I'm glad. Yeah, good to see the response of students. They have understood everything. They have understood the accounting treatment in case of change of plan. Now let's discuss one of the case study on the change in plan of sale, right? Case study 5, right? And this case study was also there in your institute study material. Okay. A property is purchased for rupees 5 lakh on 1st January 2019. The useful life of the property is 20 years, zero residual value. So friends, the cost of the property is 5 lakh rupees. Useful life is 20 years. Residual value is 0. Then what is your depreciation? What is the depreciation per annum? 5 lakh divided by 20, 25,000 is the depreciation per annum. The property is measured subsequently at depreciated historical cost, means cost model. Means under Ind AS 16, the entity has used cost model. Okay. 1st January 19 on 31st December 20. It means after how many years? After 2 years. 1st Jan 19, the company has purchased the property. So 1st Jan 19 to December 19. Then December 20. It means after 2 years. It is decided that the property is to be classified as held for sale. Classification criteria are met. Classification criteria are met. An impairment assessment on 31st December 2020. So basically, it was when this property was purchased, it was PP. You have made an accounting entry, let's say building PP account debit to bank account 5 lakh rupees. And on 31st December 19, you have also charged a depreciation account debit to PP or to accumulated depreciation 25,000 rupees. Again on 31st December 20, you have charged a depreciation account debit to ACDEP or to PP, right? And then on 31st December 20, this property has met the held for sale criteria, right? So before moving into held for sale criteria, you need to compute the carrying value as per Ind AS 16. So cost is 5 lakh rupees, right? Depreciation for 2019 is 25,000 rupees. 20 is 25,000 rupees. And your carrying value, cost minus ACDEP, cost minus accumulated depreciation is 4,50,000. But it is not a complete formula. The complete formula for carrying value under Ind AS 16, Ind AS 38 is cost minus ACDEP minus accumulated impairment losses. And some more information is given in the question. In the third paragraph, it is written that an impairment assessment on 31st December 20 determines the recoverable value based on value in use to be rupees 4 lakh. And it says that the recoverable value is 4 lakh. It is not 4 lakh 50, it is 4 lakh. It means there is an impairment element also. So your carrying value prior to reclassification as HFS will be 4 lakh rupees, right? Because the recoverable value is 4 lakh rupees. So it means apart from accumulated depreciation, we need to recognize impairment loss also as per Ind AS 16 and Ind AS 36. We need to recognize impairment loss also, right? So as per Ind AS 16, what is your carrying value? Your carrying value before classification as HFS is 4 lakh rupees. This is your value as per step number 1. This is your value as per step number 1. Right? Is it clear? Any doubt here? Friends, do you have any doubt here? Okay. So everyone is saying clear. Right. Now, the fair value less cost to sell on 31st December 20 is also given. The fair value less cost to sell. Step number 2. What is your step number 2? Your step number 2, 3,90,000 is your fair value less cost to sell. It means you have to recognize this NCA HFS. at lower of step 1 and step 2, 4,390,000, which is 390. What is the accounting entry? Accounting entry is NCA HFS account debit. HFS debit 3,90,000 to NCA PP 4 lakh, impairment debit 10,000. I'm only passing this entry for held for sale recognition, right? So otherwise the initial entry was PP account debit to bank, debt to ECDEP, right? Then your impairment loss to again your PP, right? So 4 lakh is carrying value as per Ind AS 16. Accounting entry as per Ind AS 16 needs to be passed on the date of classification as held for sale. The accounting entry would be HFS debit, impairment debit to PP, right? Any doubt so far? Okay, clear to everyone. Okay, very good. So till this part, we have done the HFS accounting. Now in the next para, on 31st December 2021, it means after 1 year from the date of classification as held for sale, there is a change in plans and the property no longer meet the criteria to be classified as held for sale. There is a change in plan and the property no longer meet the criteria to be classified as held for sale. Earlier, the property was meeting the criteria as held for sale, but now the property is not meeting the criteria of held for sale, right? And there is no change. There is no change in the useful life of the property at any point of time. What does it mean? It means what was the life? The life was 20 years. The life was 20 years. So on 31st December 19, the remaining life is 19 years. On 31st December 20, the remaining life is 18 years. On 31st December 21, the remaining life is 17 years. So the life was 20 years, which was decided since beginning. It is that only, right? So it will decrease by 1 year when every year passes by. And the recoverable value on 31st December 21 is also given. So friends, the step number 2 for change in plan has been given. Step number 2, recoverable value is given. You need to compute the carrying value on 31st December 2021. Carrying value on 31st December 2021, right? Considering this asset was not classified as held for sale. Considering this asset was not classified as held for sale. Friends, calculate the carrying value. Calculate the carrying value. What will be the carrying value? On 31st December 20, what was the carrying value? And on 31st December 21, what is the carrying value as per Ind AS 16? I am taking a pause for 30 seconds and I'll wait for your answer. Koshiki has answered 3,75,000. Okay. What about you, Manini, Aniket, Soham, Rakesh, Rahul, Radhika? Gopal is saying 4,25,000. Okay, Gopal. Probably you are reducing 450 minus 25. Okay. What about others? Just think about. Rahul has written, we will depreciate 4 lakh by remaining 18 years. Oh, that's great. Soham is saying 3,50,000. Okay. Friends, first of all, please tell me what is the, so every year you need to compute the carrying value. That is right. As per Ind AS 16, every year you need to compute carrying value. And whatever is the carrying value, for example, if there is any impairment, your carrying value will change. Na? If there is no impairment and you are applying straight line method, then every year your depreciation will remain same. But if your value has been changed, for example, if you have opted for revaluation model or you have booked an impairment, probably your depreciation value will change. Na? So what is the formula? What is the key? The key is every year you need to compute the carrying value and you need to depreciate. Subsequently, you need to depreciate this carrying value on the basis of remaining useful life. For example, the cost was 5 lakh rupees. Life was 20 years, right? So in the first year, you have charged a depreciation 5 lakh divided by 20, which comes out 25. Then you have charged a depreciation of 25,000. What is the carrying value at the end of year one? What is the carrying value at the end of year one? Please tell me. Tell me, in this case, the cost is 5 lakh rupees, right? Life is 20 years. 20 years. Now tell me, what is my depreciation? What is my depreciation? Depreciation in year one. It is 2019, right? Tell me, what is my depreciation in year one? Tell me. 5 lakh divided by 20. Simple. 25,000. In year one, it is 25,000. Right? I hope it is clear to all of you. And the cost is 5 lakh rupees. What is the carrying value? What is the carrying value at the end of year one? Carrying value at the end of year one. 5 lakh minus 475. Right? What is the remaining life? What is the remaining life now? 19 years. 19 years. Okay. And your depreciation in year two. Your depreciation in year two. What is your depreciation in year two? You need to compute the depreciation on 4,75,000, not on 4 lakh rupees. You need to compute the depreciation on 4,75,000. Why? I'll tell you. Okay. So 475 divided by 19 years. The result will same. Again 25,000, sir. How does it matter if you will compute by 5 lakh by 20? I'll show you. How does it matter? I'll tell you. Carrying value at the end of year two. What is your carrying value at the end of year two? 475 minus 25. But friends, this is not the carrying value. This is not the carrying value, right? This is not a right thing. This is not the carrying value. This is your value after depreciation. This is not the carrying value. Carrying value is a value which is recorded in the balance sheet, right? But there is an impairment also. There's an impairment also, and every reporting date, if there is an impairment indicator, if there is an impairment, the recoverable value is lower. You have to do that. You have to compute that. And what is the impairment? The impairment is 50,000 rupees, right? Because your recoverable value is only 4 lakh rupees. So friends, in this case, your carrying value at the end of year two, your carrying value at the end of year two is 450 minus 50. It is your 4 lakh rupees. Now, what is the depreciation in year three? What is the depreciation in year three? Tell me. What is the depreciation in year three, which is your 2021? What is your depreciation in year three? Remaining life, 18 years. What is the opening value? What is the opening value for computing depreciation? It is 4 lakh rupees. So again, 4 lakh divided by 18 years. 22 to 22. Now, what is your carrying value at the end of year three? What is your carrying value at the end of year three? Right. It is 4 lakh minus 22 to 22. 377,778. Friends, it is not your 22. It is not 375. It is not 4 lakh. It is not 425. It should be 377,778. Why? Please understand. Even in the year two, the carrying value is not 450. The carrying value is 4 lakh. Impairment is not Ind AS 105 thing. Impairment is a fundamental thing for every standard. Are you getting me? This is an important concept. And students do mistakes. In the paper, students do mistakes in this area. Why? Because they forget that they only think that if we would not have been classified as held for sale, then this impairment would not be there. This impairment was always there. It was always there. Even though under Ind AS 16, if it was not a case of Ind AS 105, even though under Ind AS 16, carrying value at the end of year 2 was 4 lakh. It was never 450. It was 4 lakh. Right? So this is only as per Ind AS. Only as per Ind AS 16. Clear? Is it clear? This is case study 5 from PPT, right? This is your change in plan of sale. Change in plan of sale working. So it means as per the step number 1, your carrying value as on 31st December 2021, considering this asset was never classified as HFS. What is your carrying value? 377778. If any students have not understood, please let me know. Step number 2, recoverable value as at 31st December 2021. This is given in the question as 3,80,000. 3,85,000. Right? It is given at 3,85,000. Let me see that. Yes, 3,85,000. Right? Clear? Sir, what will be the accounting entry now? Now you need to pass an accounting entry. Accounting entry at the time of change of plan. Right? PPE account debit. At what value? Lower of. What is lower? What is lower between these two values, guys? What is lower? The lower is 377,778. PP account debit 377,778 is equal to lower of what? Sorry, it is 377,778, right? This is lower of step 1 and 2. 2. NCA HFS. Sorry. 2. NCA HFS account credit. At what value? Tell me, NCA HFS will be credited by what value? Tell me, guys. NCA HFS will be credited by what value? What was the value? What was the value when this NCA HFS was created? What was the value when this NCA HFS was created? On 31st December 20, the step 1 was 4 lakh. The step 2 was 390. Right? So NCA HFS was debited by 390, PP was credited by 4 lakh, and impairment loss was 10,000. Right? So this was there. Tell me, NCA HFS, what is the value of NCA HFS? Yes, 390. Right? 390. So credit 3,90,000. Then where the difference will go? Impairment loss on reclassification. Impairment loss on reclassification debit 390 minus 377,778. Right? Clear? Is it clear, friends? This will go to impairment loss on reclassification debit. Let me know any doubt, any challenge, any problem so far. Please do let me know. Right? Yes, I will share this Excel file today itself. Don't worry. I will share it today itself. So this is your 377,778, 385, and it will be recognized at 377,778, right? Clear? Accounting entry I have also given you in the Excel file just for your better understanding, because accounting entry are always better for better understanding, right? Students, are you enjoying the class? Are you able to understand the concepts? Please tell me. Very good. Fantastic. Yeah, good. Any question so far? Perfectly all right. Yes. Now let's go to the concept of discontinued operations. What is meant by discontinued operations, right? So friends, we have discussed non-current asset classified as held for sale, right? Disposal group classified as held for sale, concept of abandoned asset, concept of change in plan of sale. We have discussed these aspects, right? Now let's discuss what is meant by discontinued operations. And before that, let me again go back to my Excel file. Discontinued operation, DCO. Please tell me, what is your understanding on discontinued operation? Please tell me what is meant by discontinued operation. Discontinued operations. What is meant by discontinued operations? Tell me what is your understanding on discontinued operations? Tell me guys, what is your understanding on discontinued operations? So discontinued operations are those operations. Discontinued operations are those operations, those verticals, those segments. It is like your cash generating unit. Have you heard about cash generating unit? I'm sure you guys are CA final students and you must have heard about in AS 28, right? I'm not saying in days, probably you are learning in days for the first time, but in accounting standard 28, sir, we have understood, we have read the concept of cash generating unit, right? CGU. You must have seen the concept of segments in the segment reporting. Yeah, segments in the segment reporting. What are these things? These are the operations. These are the business segment. These are the component of the business. These are known as a component of the business, right? Segment or known as a component of the business. But what makes, sir, there are a lot of cash generating unit in the business, right? There are a lot of segments in the business, right? There are a lot of components in the business. What makes a operation as what makes a component as an operation, as an important operation? So discontinued operation is a component where it's a component where the financial performance and the operational performance is required to be seen separately, right? For example, Tata Motors. So Tata Motors is into two kind of verticals, which is commercial vehicle vertical and your personal personal vehicle or private use vehicle vertical, right? So Tata Motors management wants to see what is my revenue, what is my profit, what is my performance, what is my cost, what is the quantity which I have sold in my private vehicle segment and in my commercial vehicle segment, right? So for Tata Motors, these two segments are two different verticals, right? These are two different components where they're looking the financial performance as well as operational performance separately, right? For example, Tata. So when Mr. Ratan Tata is looking at the overall business of Tata, they are looking at what is the revenue, what is the profitability, what is the cost, what is the efficiency in my steel business, what is there in my vehicle business, what is there in my jewelry business, what is in my FMCG business, right? What is in my real estate, what is in my banking and financial sector, right? So they are looking these operations as a separate operations, right? These are the big operations. Okay. So the component operations for which the financial information has to be shown separately, right? Has to be seen separately is known as a component of the business, is known as a important operations, right? Now tell me one thing, whether discontinued operation, if a company has a discontinued operation, if a company has a discontinued operations, if the company has a discontinued operation, sorry, if the company has discontinued operations, is it a case of individual asset held for sale or disposal group held for sale? Tell me. If the company is having a discontinued operations, is it a case of individual asset held for sale or disposal group held for sale? Is it a case of individual asset held for sale or disposal group held for sale? Kaushik is saying, sir, disposal group. Manimi is saying group of asset held for sale. Aniket, Gopal, everyone is saying, sir, if we are discontinuing our operation, it means it is a group of assets, not a single asset, right? We can't say that my single asset is my operations, right? Okay. Okay. Now tell me again whether every discontinued operation will have a disposal group, right? We have seen the accounting of disposal group. We have seen the accounting of asset held for sale. So discontinued operation, is it a case of individual asset or a disposal group held for sale? You have said that disposal group held for sale. Disposal group held for sale. Okay. But whether every discontinued operation will have a disposal group? Tell me. Whether every discontinued operations will have a disposal group, or whether every discontinued operation is a disposal group. What is your view? So Karthik is saying no. Manini is also saying no. Why you guys are saying no? What is the reason for that? I'm more interested in knowing the reason. Whatever you have said, that is right. But why no? Manini is saying may or may not. Yes, you're right. Rashmi is saying will not be. Kaushik is saying yes. Otherwise, it will be NCHFS. Guys, now I'll give you an example, and after that, it will clear everything. Let's say I'm a faculty, okay, and I'm into teaching of financial reporting and auditing, right? These are my two verticals, financial reporting and auditing. I'm having an institute in Gurgaon for financial reporting. I am having an institute in Delhi for auditing, right? So I have two institutes, right? And I have taken these two places on the basis of rental, on a rental basis, right? So I'm having a setup in Gurgaon, I am having a setup in Delhi, and I'm having two verticals. I am looking at the financial performance of my FR classes and financial performance of my auditing vertical auditing classes separately, right? What is the revenue? How much batch I'm running for FR? How much batch I'm running for auditing, right? What is my revenue from FR? How many students are there? What is my revenue from auditing? How many students are there, right? What is more effective? What is more efficient for me? What is more productive for me? What is more revenue generating for me? I'm looking the financial and operational performance separately, right? And I can do that also, right? Because the student who will come for FR will pay me FR for FR. The student who will come for auditing will pay me for auditing, right? So whether every discontinued operation is a disposal group. So now in this example, let's say I have decided to discontinue my Delhi based institute. I have decided to discontinue my auditing related operations, my auditing related vertical, and I only want to teach financial reporting. Friends, I do have the moment I have decided that I will discontinue my auditing vertical, which is my one of the important revenue generating vertical, I have discontinued there, right? And of course, tomorrow, let's say if I'm a listed institute, and tomorrow when the user will look at my balance sheet, my P&L, probably my revenue declining trend will be there, right? The declining revenue will be there. But the setup which I am having in the Delhi Institute, which is your furniture, chair, table, projector, laptop, whiteboard, mic, right, podium, the setup which I was having in my Delhi Institute, it may not need to be required to be sell, right? When an asset will be classified as an NCA-HFS or disposal group held for sale, when it is available for sale. I'm not saying that I'll sell. Probably I will use that Delhi based assets into my existing business, into my continuing business, which is my FR related institute, which is my FR institute. I'll get those chairs, I'll get those furniture, laptop, projector, computer, mic, podium, and I'll put that into my Gurgaon based institute. Friends, tell me two things. First, earlier I have two verticals. One is my FR related vertical, one is my audit related vertical, which was Delhi based, and it is your Gurgaon based. Is it a case of discontinued operations? Is it a case of discontinued operation? I have discontinued my one of the important vertical. Answer is yes. Friends, but the assets, the group of assets relating to Delhi Institute, is it a case of disposal group held for sale? Answer is no. Why? I am not ready to sell these assets. I have deployed this asset in my continuing business, and I've used those assets in my continuing business. This is not a disposal group held for sale. So you are right. The students which have written may or may not be, and not necessarily they are right. Right. So whether every discontinued operation is disposal group, answer is not necessary. Not necessary. Discontinued operation will be a disposal group only when entity decided or met the criteria of HFS for those group of . Is it clear? Is it clear, guys? Yes or no? Is it clear? So if the discontinued operation is your disposal group, then what is the accounting? Accounting is same. Step number 1, compute the carrying value less cost to sell. Sorry, compute the carrying value as per the respective standard of the group. Compute fair value less cost to sell. Find out the impairment loss. Allocate the impairment loss. The accounting is same. Right? Right. But what are the presentation and disclosure requirement? I'll tell you. Before that, let me discuss this thing, and then I'll come to the presentation and disclosure requirement, because it is very important. What is discontinued operation? A component of an entity comprises operations and cash flows that can be clearly distinguished operationally and for financial reporting purposes from the rest of the entity. Means the entity which is computing, which is looking at the results, looking at the operations results of a component which is a critical component, which is an important component for that entity, and the company is looking at the results of those segments separately. In case of segment reporting, what will happen? The company used to see the segment results, segment assets, segment liabilities, segment profit separately from the rest of the entity, right? So likewise, if a component is comprising a operation and cash flow which can be clearly distinguished, I mean to say I can clearly find out what is my cash flow, what is my profitability, what is my revenue. Like in my example of FR and audit, can I separately compute the revenue, cost, profit, asset, liability from Delhi based institute? Answer is yes. Answer is yes. Right? In other words, a component of an entity will have been a CGU or a group of CGU while being held for use. Right? A discontinued operation is a component of an entity that has been disposed of, or is classified as held for sale. Either that operation has been classified as held for sale, or it has been disposed of without sale, right? Which represent a separate major line of business or geographical area of operations, right? For example, in just 5 years ago, HSBC Bank has declared that we will discontinue our private banking vertical in India. They have declared that, right? They have declared that So what is this? This is a major line of business which they want to discontinue. For example, Tata Motor will say, I will discontinue my commercial vehicle segment because my Tata Nexon is doing pretty well and I'm happy with the private segment. Earlier, Tata was known for the commercial, but now the Tata has also, Tata has also just fixed their step into private sector also. So they are saying that we are happy and we are going into only private sector, not in the commercial sector, right? I'm just taking an example. So this is a major line of business. For example, few years back, HSBC has said that we will discontinue our Turkey business in Turkey. So this is a discontinuation of geographical area of operation, or is part of a single coordinated plan to dispose of a separate major line of business or geographical area of operations. For example, McDonald's has 500 outlets, and McDonald's will say that I will discontinue entire outlet of India, right? So I'll start from North India, then we'll go to South India, then Eastern India, then Western India, then Central India. So this discontinuation is a part of a single plan, single coordinated plan, right? Clear? Or for example, so this is a single coordinated plan for geographical area to discontinue geographical area of operation. For example, Tata Motors has 5 plants across India, and they will say that slowly and gradually we will discontinue the manufacturing of commercial vehicle in our plants. So we will first discontinue, let's say, Eastern India plant, then Western India plant, then Southern India plant, then Northern India plant, then Central India plant. So it is a part of a single coordinated plan to discontinue the major line of business, right? Or is a subsidiary acquired exclusively with a review of resale. The entity has acquired a subsidiary and the intent is to resell that subsidiary. So it is again considered as a discontinued operations. I hope it is clear to all of you, friends. I hope it is clear to all of you. Right? Is it clear? Okay. A company XYZ has 5 different operating segments, one of which solely produces consumer goods, right? All the consumer goods production facilities are situated in Central Europe. XYZ also has other operation in Central Europe for other operating segments. In April 2001, XYZ disposed of its consumer goods segment, which meet the definition of a component of business, right? Clear? So XYZ has disposed of consumer goods segment, and it has 5 operating segment, right, which produces consumer goods, and all the consumer goods production facilities are situated in Central Europe, right? So they have disposed of their consumer goods segment, which is a major line of business, right? So which meet the definition of a component of business and represent a separate major line of business and would therefore be considered as a discontinued operations, right? Is it clear, friends? Is it clear? Right? So let's discuss this case study. Then we will discuss one example from study material. Then we will talk about presentation and disclosure. Sun Limited is a retailer of a takeaway food like burger and pizzas. It decides to sell one of its outlet located in Chandni Chowk in New Delhi. Right? The company will continue to run 200 other outlets in New Delhi. It decided to sell one of its outlet located in Chandni Chowk in New Delhi. The company will continue to run 200 other outlets in New Delhi. All Ind AS 105 criteria for held for sale classification were first met at 1st October 2016. The outlet will sold in June 2017. Okay, fair. Management believes that outlet is a discontinued operation and wants to present the results of outlet as a discontinued operations. Tell me, what is your view? Tell me, what is your view? What is your view, guys? Rasmi has said, if there is no further use of asset in existing business, just I am talking about the earlier response given by the Rasmi, not related to this case study. If there is no further use of asset in existing business, then the group of asset will be HFS. Otherwise, it will be added to existing business PPE. So Rashmi, again, the non-current asset held for sale and disposal group. I mean to say, asset under Ind AS 105 is solely dependent on the management intention to sell, right? If the management is intending to sell and they are meeting the HFS criteria available for immediate sale in present condition, sale is highly probable, only then it will come under Ind AS 105, right? As far as accounting is concerned. Friends, tell me, is it a discontinued operations? Is it a discontinued operation? Gopal is saying yes. Soham is saying no. Manini is saying no. Radhika is saying no. Rohan is also saying no, sir. It is a disposal group held for sale. Guys, tell me, there are 200 outlets in New Delhi. They are only selling one outlet. Is it a discontinuation of major line of business? Tell me, is it a discontinuation of major line of business? Is it a discontinuation of geographical area of operations? Are they discontinuing from the state of Delhi? They are just discontinuing from Chandni Chowk. Probably they have 200 outlets in New Delhi. Probably they have a second outlet just 1 kilometer or 2 kilometers away from Chandni Chowk. Right? Right? So is it a separate major line of business? Answer is no. Is it a discontinuation of geographical area of operation? Answer is no. Whether it is part of a single coordinated plan to dispose of a separate major line of business? Answer is no. It is not written in the question. It is a single plan to discontinue geographical area of operation? Answer is no. Is it a subsidiary acquired exclusively to resale? Answer is no. So it is not. It is not. It is not a discontinued operation, as it is only one outlet. It is a disposal group. It is a disposal group. It is not major line of business or geographical area, nor a subsidiary acquired with a view to resale. Anyone who has a different view? Anyone who is not clear? Gopal, are you clear on this part? Gopal, are you clear on this part? Very good, friends. Very good. Okay. Yeah. Illustration number 3 from Institute study material. Friends, identify whether each of the following scenarios gives rise to a discontinued operations and or classification of asset as held for sale. I mean to say disposal group. Okay, don't get confused with asset or disposal group. It is a disposal group. For example, MNO disposes of a component of the entity by selling the underlying assets. Disposes of, written in the question, a component of the entity by selling the underlying asset. The sale transaction is incomplete at the reporting date. The sale transaction is incomplete at the reporting date. What is your answer, guys? What is your answer? What is your answer? I hope my PPT is not visible. Is it visible now? I hope it is visible now. What is your answer? MNO disposes of a component of the entity by selling the underlying assets, and the sale transaction is incomplete. So sale has not been done. They have decided to sell one of the component, right? So is it a discontinued operation? Answer is yes, it is a discontinued operation. Doesn't matter whether the sale transaction is incomplete or not. If it is meeting the held for sale criteria, it is okay, right? So probably if the sale transaction is not complete, but they have disposes of, they don't want to continue that segment. So of course it is a discontinued operation. But whether it is classified as asset held for sale, I mean to say disposal group held for sale. Yeah. Yes, it will be classified as disposal group held for sale. Why? Because it is written now that the entity wants to sell the underlying asset, sale transaction is incomplete. So we are assuming that the HFS criteria is meeting. PQR has ceased activities that meet the definition of a discontinued operation without selling any of assets. Just like my auditing business. They have discontinued one of the operation, and it is written that it meets the definition of discontinued operation. Of course, yes. But they don't want to sell any asset. They want to keep the assets. Is it a case of disposal group held for sale? Is it a case of non-current asset held for sale? Answer is no. The basic condition is missing. Clearly says that they don't want to sell the asset. Answer is no. STU STU ceases activities and has already completed the sale of the underlying asset at the reporting date. STU ceases activities means they have stopped activities and has already completed the sale of the underlying assets at the reporting date. And they have already sold out. They have ceases activities, already completed the sale of assets relating to discontinued operations. Yeah. They have already completed the sale of discontinued operations. Hence, yes, it is a discontinued operation. They have discontinued the operation. But on the reporting date, it is not held for sale. Why? Because they have already sold out. It was actual sale. It was actual sale. On the reporting date, nothing is going to be sold out. Everything has already been sold out. It is written that the sale of the underlying asset at the reporting date already completed the sale of the underlying asset at the reporting date. Right? Clear? VWX will sell or has sold assets. They will sell some asset or they have sold some assets that are within the scope of Ind AS 105, but does not discontinue any of its operation. They are selling the asset, but don't want to discontinue any operations. Tata Motors wants to sell the plant and machinery. They want to take new plant and machinery, or they want to sell one of the plant and machinery, but they want to continue that commercial vehicle vertical. So of course, it is not a discontinued operation, but yes, it is a held for sale. Let me know if you have any doubt on this illustration number 3. It is a very good illustration on understanding what is my DCO, what is my held for sale, right? Just relating to DCO. You're right, Rashmi. Asset has already sold out and that is why it is not held for sale. Nothing will come into balance sheet, na? It has actually been sold out. So the line item asset or disposal group classified as held for sale will not be there because everything has been sold out. Kosiki, what is not clear to you? Concept of DCO and disposal group. Kosiki, what is your discontinued operations? When you are discontinuing a vertical, a component, a critical part of the business, right? And when you are discontinuing a business, probably what you will do with the assets? What you will do with the assets? You will sell out, or probably you will use those assets in your existing or running business, right? Right. So first of all, if you are selling the underlying assets, if you are selling the underlying assets of discontinued operations means those operations which has been discontinued or is going to be discontinued, already decided to be discontinued, right? So if the entity has decided to sell off the underlying asset of discontinued operations, in that case, what is the accounting treatment? The accounting treatment is sale of sale of it is a sale of group of assets. Na? The underlying asset is going to be sold out. So it will be classified as disposal group held for sale from the accounting perspective. But if a disposal group is a discontinued operations, if a disposal group is a discontinued operation, then some separate presentation and disclosures are also required. See, every disposal group is not a discontinued operation. Please write down. Every disposal group is not a discontinued operations. Again, I am saying that every discontinued operation, every DCO is not a DG, and every DG is not a DCO, right? Understood? In discontinued operation, if you are not selling your asset, it is not disposal group held for sale. If a disposal group is not a big segment where you are looking at the financial and operational performance separately, it is not your discontinued operations, right? Understood? For example, in Delhi based institute, I was teaching financial management and auditing, and there were hardly few students of financial management, and whomsoever is coming for auditing, I am teaching them financial management as a package, as a free of cost. I'm not looking at the revenue from financial management separately. It is hardly, it constitutes 2-3% of my entire business, 5% of my business, right? And of course, there is a separate room where I'm taking classes for financial management and I want to discontinue that financial management thing, right? And whatever assets are there, I'm selling of those assets which is lying in that room. Of course, disposal group is there, but it is not considered as a discontinued operation. Like in the recent example of this burger pizza outlet, that outlet was a disposal group, but that outlet was not a discontinued operations. That outlet was not a discontinued operation. Tata is selling one of the factory. It is a disposal group. It is not a discontinued operation. Tata is, when the Tata has shifted from Bengal to Gujarat for Tata Nano plant, whether that Gujarat, whether that Bengal plant was discontinued operation. No, they are not discontinuing the operations. They are only disposing. It is this Bengal factory was just like a disposal group. It was not discontinued operation. Are you getting me, Koshiki? Guys, are you getting me? Have you understood this? Very good. Koshiki, is it clear to you now? 4 is VMX will sell or has sold assets that are within the scope of Ind AS 105, but does not discontinue any of its operations, right? So it is not a discontinued operation, but yes, if they are selling their assets, it will be your held for sale assets, right? Clear? This is your answer, which is given in the study material as well. Clear, friends? Now it's 8:35. Let's have a break for 10 minutes. We will start at 8:45, right? And I will conclude the class today maximum by 9:30. Okay. relating to example number 3 and example number 4. So let me clear this confusion now. See, in example number 3, what is written here? STU ceases activities and has already completed the sale of underlying assets at the reporting date, right? It has written that ceases activities. It seems that it has ceases activity. It seems that it is a case of a operations. It is a case of a segment, and that is why in discontinued operation it is written as said. It is written as yes, because of course this operation is discontinued, right? Discontinued. But as far as asset held for sale is there, why it is written as no? Because on the reporting date, see, I have shown you a balance sheet, right? I have shown you the balance sheets also. On the balance sheet date, on the reporting date, if there are held for sale assets, then there will be a line item known as a non-current asset held for sale, right? But in that line item, if nothing is held for sale now, so it will be zero. There will be nothing called as held for sale. So since all the assets has already been sold out, nothing is sold out, nothing is remaining to be sold out on the reporting date. That is why it is written as no, right? In fourth example, VWX will sell or has sold assets that are within the scope of Ind AS 105. So you are right, it is little confusing, right? But it is written that will sell. So it is more from the perspective of will sell. Okay, if it is written that VWX has sold assets, has already sold out the assets, in that case it must be no, right? But they have used the word will sell, and that is why it is yes. In the examination, if you find some confusion, please write down the assumption on the basis of which you have given the answer, right? It will be correct. Okay. And as far as discontinued operation is concerned, it is already written that it is not discontinued operation, right? Clear? Mithun, is it clear? Great. Now let's come to the presentation and disclosure part. And it is very important, I'll tell you. So let me go back to my Excel file. I hope my Excel file is visible to all of you guys. I hope it is visible. Visible, friends? Yeah. Non-current asset held for sale or disposal group held for sale, right? As far as non-current asset held for sale or disposal group held for sale, we are very much clear about the presentation, right? Let's say presentation of NCA HFS or disposal group held for sale. In the balance sheet, there will be an asset, and under asset there will be a non-current asset. There will be a current asset, and there will be a non-current. Under current asset, there will be a non-current assets or disposal group classified as held for sale, right? So these are the three categories under your balance sheet, right? In your liability side, there will be equity, there will be a non-current liability. Let's talk about only liability. There will be a non-current liability, there will be a current liability, and there will be a liabilities associated with, liabilities related to or associated with NCA or DG classified as held for sale. Clear? This is your presentation in the balance sheet for non-current asset held for sale and disposal group held for sale. As far as P&L is concerned, in statement of profit and loss, in statement of P&L, impairment loss, the impairment loss needs to be shown separately, right? Which impairment loss? The impairment loss due to recognition of NCHFS at lower of carrying value and fair value less cost to sell, right? Separately in P&L or in notes to account, right? Arised due to recognition of NCA HFL, right? It has to be shown separately. So nothing is required to be shown different in statement of P&L. Why? Because it is only a group of asset or it is only an individual asset held for sale. It is not impacting my entire operations, right? Now let's talk about discontinued operations. Now let's talk about presentation of discontinued operations, and I'll call it as a DCO. I'll call it as a DCO. So presentation relating to discontinued operations, DCO. Okay. So this DCO may include disposal group, may not include disposal group. That we are clear, right? And let's say I'm preparing a statement of profit and loss. Statement of profit and loss for the year ending. For the year ended March 31st, 22. For the year ended March 31st, 2022, right? Let's say there is a company AG Limited. There is a company AG Limited. Company AG Limited. Right? And this company AG Limited is selling two important products, two main products, product A and product B. Product A and product B, right? And the total sale is, let's say, 1,000 crores, and product A contributes 60% of the entire revenue, and product B contributes 40% of the entire revenue. 60% and 40%. The total sale is, let's say, 1,000 crores. It means 600 crore belongs to product A, 400 crore belongs to this one, and this is 1,000 crores, 1,000 CR. Right. Now, this company AG has discontinued the operations of product B as on 30th September 2021. As on 30th September 2021. Okay. This company has discontinued the operations of product B. Clear? So company has discontinued operations of product B on, let's say, September 30, 2021. So normally the company sale is normally 1,000 crores, but right. But and this is the 60-40 is the proportion. 60-40 is the proportion. Since the company has discontinued the operations of product B, the sale of product B on 30th September, it means the company has sold out the goods related to product B only for half of the year. So let's say in the current year, 2021-22, this is the sale contribution. 600 crore sale was for product A and 200 crores sale was for product B. The total is 800 crores, right? Now, friends, the company has discontinued the operations of product B, and which is having a revenue of 200 crores, right? Which is having a revenue of 200 crores in the current year. But if it would be for entire year, it would be 400 crores. So, friends, tell me, while preparing my statement of profit and loss, right? There are two ways. There are two ways. Okay. For example, this is my 2021-22 profit and loss. Let's say revenue. Revenue is 800 crores, right? My cost is, let's say, 600 crores. My PBT is, for example, 800 minus 600, 200 crores, right? My tax is, let's say, 30%. Tax at the rate of 30%. It is, let's say, 30%. Sorry. 3 crores. Your PAT is 200 minus 60. It is 140 crores, right? This is your PAT. This is your P&L 21-22, right? Now, first of all, tell me, by looking at this P&L, whether a normal user will able to understand that this revenue of 800 crores is sustainable revenue or not. Yeah, whether the user will be able to understand this revenue from this revenue of 21-22 is a sustainable revenue or something major has been happened. The user will not be able to understand. Now I am showing you a different thing, right? Let's say again in 21-22, the company has disclosed revenue from continuing operation, revenue from discontinuing operation, right? So it is a revenue. Let's say just a minute. Revenue from DCO, revenue from continuing operation, discontinuing operation. Okay. Let's say revenue from discontinuing operation is so let me write down like this manner. Revenue from continuing operation is 600 crores. Revenue from discontinued operation is 200 crores. Right? Then they have also shown the cost. Cost from continuing operation, discontinuing operation. For example, the cost from continuing operation is, let's say, 500 crores, and the cost from discontinuing operation is 100 crores, right? Then your PBT. (600 minus 500), 200 minus 100. Okay. Then your tax. Multiply by 30%. Again, multiply by 30%, right? Then your PAT. Friends, the company has given this kind of P&L, right? So in this P&L, the user will be able to understand that the surviving revenue is not 800 crores. The surviving revenue is 600 crores only, because the company has already discontinued the operation relating to one of its component, right? And in future, the company will not be able to earn revenue from this component, and hence 200 crore is not a surviving revenue. 200 crore is current year revenue relating to a discontinuing operation. And at a place of 200, the cost of 100 crores will not arise as well. PBT, the company's PBT of 200 crore is not a sustainable PBT. The sustainable PBT is 100 crores only. Sustainable PAT is not 140 crores. The sustainable PAT is only 70 crores, right? And this is your continuing operation. This is from your discontinuing operation. Friends, do you think this kind of P&L will give you some insight as a user of the financial statement? It is relevant for taking decisions. Yeah. I'm talking about yes, P&L. Do you think that yes, it is important to take some decisions? Yeah. So which you are thinking is better way of presentation? Whether this P&L should look like in this manner, or this P&L should look like this: revenue, cost, PBT, tax, PAT, from continuing operation, from discontinuing operation, and EPS also from continuing operation and discontinuing operation. Yeah, is it clear? Now I'm giving you one more clarity. Okay. Now I'm so everyone agree that sir, this one is better presentation, because this will give an insight that it is not going to be a sustainable profit, sustainable revenue, sustainable cost, and hence the element of P&L, the line item of the P&L has to be properly bifurcated into continued operation and discontinued operation. Okay. Is it a better way of presentation? Let me show you one more presentation of P&L. But we all agree it should not be this one. This is not right. We all agree this is not right, right? Because this is not giving a proper insight. This is not right. We all agree. Now I'm giving you another presentation, and let me know if this you find much better presentation. Continuing operation. Continuing operation. Right? Revenue cost PBT tax. Okay. 600, 500. Yeah. Discontinued operations. Okay. So again, your profit, your PAT from, or let's say PBT, then tax, then PAT. Okay. So PBT is 100, then your tax is 30, and your PAT is 70. Right? Then your total profit. Okay. Then your total profit. Right? Or even you can just put the PAT also, right? Let's say just put the PAT. Simple. PAT from CO. Now this is PAT from discontinued operations. Which is 70. Total is this. And for DCO, let's refer note. Refer note XX. And in the notes to accounts, just give a complete P&L of discontinued operation. What do you think? Which is the better way of presentation? What do you think? Which is the better way of presentation? Which is the better way of presentation? What do you think? Whether this one, by giving every line item separately and making your P&L a big P&L, or this one, just a summarized P&L. I mean to say, the continuing operation complete P&L, then one line item which is profit after tax from discontinued operation, and give the entire P&L relating to DCO in the notes to accounts. Right? Kosiki and everyone is saying yes. The second one, right, is much more appropriate. You are right. And listed companies are using this presentation in their annual accounts. So friends, let me show you the requirement of presentation and disclosure. Then I'll show you the Hindalco Industries annual report on a real-time basis, on a live basis. An entity shall disclose a single amount in the, but you have understood why it is important to have a separate presentation and disclosure relating to discontinued operation, because this is something where the entity has disposed of its critical part of the business, and user is required to informed that this is not a sustainable revenue, this is not a sustainable cost, this is not a sustainable profit, right? So an entity shall disclose a single amount in the statement of P&L comprising the total of post-tax profit or loss of discontinued operation. Post-tax means PAT from single amount, as I have shown you in the second example. Single amount, PAT from the discontinued operation, and the post-tax gain or loss recognized on the measurement to fair value less cost to sell or on the disposal of the asset. If your discontinued operation, if your DCO is your disposal group also, if your DCO is disposal group also, it means you are selling assets. So you will have two P&L impact. One, when you are classifying your disposal group held for sale, then you will recognize it lower of carrying value and fair value less cost to sell. So you will have an impairment. You will have a gain or loss. You will have a loss actually, right? Second, when you are actually selling out, in that case, you will have an actual profit or loss also. So standard says that you need to disclose post-tax profit or loss of discontinued operation, as I have shown you. Second, the post-tax, because if you are recognizing an impairment loss on the classification as HFS, and you are recognizing a loss or gain on the actual sale, it is having a tax impact also. So you have to disclose a separate line item saying that it is my gain or loss on account of classification as HFS or on account of actual sale of disposal group, right? This is the first way of presenting the discontinued operation in the P&L. What is the second way? The second way is you have to show the analysis of the single amount into revenue, expense, PBT, tax, like I have shown you in the first presentation, right? Then income tax expense, then your gain or loss recognized on the classification as HFS and sale of that disposal group, and related to and the related income tax separately, and then related paid separately. It means the detailed one on the face of P&L itself, the first presentation, right? But this analysis, this presentation standard says that you can show it into the P&L on the face of the P&L, or you can show in the notes to accounts as well. You can show in the notes to accounts as well, notes or in the statement of P&L. Right, friends? Now let me show you. The Hindalco Industries annual report. Let me know if the annual report is visible to all of you. Let me know if the annual report is visible to all of you. If you see the balance sheet, in the balance sheet, it is non-current assets or disposal group classified as held for sale only, right? In the balance sheet. Okay. Why? So of course, held for sale asset will come into the balance sheet if it is on the reporting date, right? In the P&L, let's see in the P&L, continuing operation, income, revenue, other income, total income, expense, everything is there in detailed manner. Everything is there, right? So this is your profit, PBT, tax. This is your profit or loss, PAT, from continuing operation, 5182 crores. Now, friends, this is discontinued operation. PAT, sorry, PBT from discontinued operation, tax benefit from discontinued operation, then profit or loss for the year from discontinued operation. You can see that this is from continuing operation, this is from discontinuing operation, and this is your profit or loss for the year, right? And when you see the OCI, OCI also in other comprehensive income, note number 38, 4784 is your OCI, right? It is your OCI. Now let's go to the note number 50. The note number 50. Let's go to note number 50. Okay. And in note number 50, we will see that just a minute. Yes. In the note number 50, can you see the note number 50? It is note number 50, right? Discontinued operations. And let me show you the presentation in the notes to accounts. Financial performance of the discontinued operation for the year ended is as follows. Total income, expenses, impairment loss recognized as a result of remeasurement of fair value less cost to sale as a separate line item. Loss before income tax benefit, loss after income tax from discontinued operation, gain on sale of discontinued operation net, the actual gain on sale, income tax benefit, gain after income tax on sale of discontinued operation, total loss from discontinued operation 1699. Have you seen that 1699 in the P&L? See, the entire in the P&L it was written as 1699 as a one line item, but the entire breakup, the entire complete financial performance has given in the notes to accounts, right? 51 is relating to the OCI and 1648 is the comprehensive loss which is recognized due to discontinued operations, right? And the assets and liabilities which were classified as held for sale in relation to discontinued operation is also given, right? These are the disposal group which have been considered as a discontinued operations also. So assets and liabilities are also given. Is it clear, friend? Is it clear or not clear? Tell me. Is it clear or not clear? I've shown you the actual disclosure in your listed companies. Yeah. Have you understood this? Yes or no? The entire breakup is given in the notes to accounts. In the P&L, it has been shown as a single line item in the P&L, right? You can see that in the P&L, it is a single line item. Okay. Clear? Okay. Now let's look at the accounting policy also, because I have not shown you the disposal group accounting policy. And then you will tell me that whether I have taught you this accounting policy or not. Discontinued operations. Please see this accounting policy. Discontinued operation is a component of an entity that either has been disposed of or is classified as held for sale and that represent a separate line of business or geographical area of operation, or is part of a single coordinated plan to dispose of such a line of business, or area of operations, or is a subsidiary acquired exclusively with a view to resale. The result of discontinued operation are presented separately in the consolidated P&L. See note number 15 for non-current assets or disposal group, note number 50 for discontinued operations. Guys, do you think that it is copy paste? Whatever is there in my presentation, do you think that this accounting policy is copy paste? Yeah. Yes, friends. Good. So this is the presentation requirement for discontinued operations, right? So why only for discontinued operation? Because you are discontinuing a operations, right? Which is an important part of your business, and hence user is required to be make them understood that yes, this is a something which is a critical part of the business which is going to be disposed of, and you will not look at the financial performance going forward, right? So that they should take a decision, right? Clear? Very good. Fantastic. So friends, let's come to the comparison with Ind AS and accounting standard. In Ind AS, the guidance is Ind AS 105. In accounting standard, it is AS 24, right? And I have told you that AS 24 only talks about DCO. It did not talks about your non-current asset held for sale, right? So Ind AS 105, it talks about non-current asset held for sale and the presentation and disclosure of discontinued operation. But AS 24 only talks about discontinued operations. Measurement presentation, there's a detailed criteria which is given for NCHFS in your AS 10 and AS 26, because this held for sale is taken care by AS 10 and AS 26. And in Ind AS 105, there is a detailed criteria for classifying an asset as a held for sale. There is a criteria for giving the accounting treatment of change in plan, but in accounting standards, such detailed guidance is not given. So in AS 10 or AS 26, it says that if the fixed asset is retired from active use and held for disposal, it has to be recognized at lower of their net book value and net realizable value. So that is what written in the accounting standard. So this is the only difference, right? Friends, please let me know if you have any doubt in discontinued operations. Let me know if you have any doubt in discontinued operations. Please let me know. We have discussed the meaning of discontinued operation. It is something which is a component of the business, and that component, the management is looking at the financial and operational performance separately, right? And the management is able to, find out the financial and operational performance separately as well, right? Clear? And discontinued operation is a component of an entity which has been disposed of or is classified as held for sale, right? Whether it has actually been disposed of or it is classified as held for sale, right? Which represent a separate major line of business or geographical area of operation, or is a part of single plan to dispose of, again, a major line of business or geographical area of operation, or it is a subsidiary. Just you remember two things: discontinuation of separate major line of business or geographical area of operation, not discontinuing immediately, whether it is a part of a plan to discontinue major line of business or geographical area of operation, or it is a subsidiary which is acquired for sale. Simple, right? We have discussed one of the example. Then again, this case study 6. Then again, this case study from ICI study material, right? In detail, then presentation and disclosure requirement in a summarized manner, and detail in the notes to accounts, or detail in the P&L itself. Okay. Yeah. Differences we have discussed. Any doubt so far, guys? Please let me know. Any doubt so far? Fantastic. Thank you, Rohan, for such a nice feedback. Thank you so much. Yeah, let's discuss MCQs relating to true or false, right? An entity can continue to depreciate an asset even if it classifies it as non-current asset held for sale as per Ind AS 105. True or false? I want everyone to respond to this. Tell me, true or false? Everyone is saying false. Yes, you're right. If you would have said that it is true, I can start the lecture again. I will start the lecture again. Asset classified as held for sale must be presented under the appropriate asset head with a separate disclosure in the note. For example, if there is an asset held for sale PP, intangible asset. So this question says that intangible asset held for sale has to be clubbed with intangible asset only. PP held for sale has to be clubbed under PP only. And the disclosure has to be given in the notes to account. Is it right? It is not right. For every asset held for sale, there is a separate line item under current assets category, right? So it is false. It is false. Question number 3. Friends, like we have discussed, the concept of asset held for sale. There is a very small concept of asset held for distribution, right? Asset held for distribution. For example, instead of selling, the company is committed to distribute the asset to the shareholder as a dividend, right? In that case, what is the criteria? Everything is same. Like in case of held for sale, what is the criteria? Available for immediate sale in present condition and sale is highly probable. So what is the criteria for held for distribution? Available for immediate distribution in present condition and distribution is highly probable. That's all, right? So under Ind AS 105, an entity is committed to distribute the asset or disposal group to the owner. That is, the asset must be available for immediate distribution in their present condition and the distribution must be highly probable. That is just a small concept, right? Everything is same relating to the accounting treatment, right? Question number 4. How to measure a non-current asset or disposal group which ceases to be classified as held for sale? It means change of plan. It means change of plan. Tell me, in case of change of plan, how you have to measure this NCHFS or disposal group? First option, lower of carrying amount. What is the answer for that? First of all, you have to recognize that lower of what? Carrying value had the asset never been classified as a held for sale. So carrying value on the date of change of plan and recoverable value on the date of change of plan. So lower of carrying amount which would have been had the asset never been classified as HFS and recoverable amount. Lower of carrying amount which would have been had the asset never been classified as HFS and recoverable amount. Lower of carrying amount on the date asset ceased to be classified as held for sale and recoverable amount. Second option is saying lower of carrying amount on the date asset ceased to be classified as held for sale. It is saying that whatever is the carrying value on the date of change of plan that you need to take and recoverable value. So this is not right. It is saying that the carrying value on the date of change of plan. It is not right. We need to compute carrying value, which would have been had the asset never been classified as held for sale. We have to compute that, right? So this is not right. Lower of carrying amount and fair value less cost to sell. This is not right. This is right in case of classification as NCHFS, not at the time of change of plan. Lower of carrying amount and the amount which would have been had the asset not been classified as HFS. So what is the right answer? A is the right answer. Very good. 9 students have responded and they all have responded right. Very good, guys. So thank you so much, guys. In this standard, we have discussed what is non-current asset held for sale, what is disposal group, what is discontinued operations. We have discussed the criteria for classification of an asset or disposal group as held for sale, which is ISPC plus HP. We have discussed the exceptions also, Then we have discussed the measurement requirement at the time of initial recognition of NCHFS, which is at lower of carrying value and fair value less cost to sale. Once it is considered as NCHFS, the depreciation and amortization will stop, right? Then we have discussed that if subsequently there is an increase in fair value less cost to sell, it has to be recognized only to the extent of earlier impairment losses, right? If there is a decrease, the decrease has to be recognized. Okay. Then we have discussed the concept of abandoned asset. If the asset is taken out of active use, of course, that asset is not a held for sale. That asset is your abandoned asset, and Ind AS 16, Ind AS 38 will apply, right? Then we have discussed that in case of a change of a plan, then what will happen in case of change of plan? You need to compute the carrying value as per the respective standard. For example, Ind AS 16 generally, right? If this asset would not have been classified as held for sale, then what is my carrying value on the date of change of plan, right? That you need to take, and your carrying and your recoverable amount on the date of change of plan. That will be your new value under Ind AS 16, right? Whatever decline is there from NCHFS to Ind AS 16, it has to be taken as impairment loss. Then we have discussed the concept of discontinued operation. It is a component of an entity which shows that discontinuation of major line of business or geographical area of operation, or it is part of a plan to discontinue major line of business or geographical area of operation, or it is a subsidiary acquired exclusively with a view to resale, right? If a discontinued operation is a disposal group, then of course accounting treatment as per disposal group will happen, right? What we have said, the step number 1, compute the carrying value for the disposal group as per the respective standard in the disposal group. Second, compute fair value less cost to sale of the disposal group. Whatever is the impairment loss, please allocate the impairment loss on the disposal group and find out the list of asset which is lying at the value of the disposal group in the notes to accounts, right? In balance sheet, it will be a single line item. So if discontinued operation is not a disposal group, then of course in balance sheet nothing will come. But if you have ceased the activity, you have discontinued the operation, of course it will impact your performance, it will impact your P&L. In that case, of course in P&L, the presentation and disclosure requirement will be there. What is the presentation and disclosure requirement? You need to present the revenue, cost, PBT, tax, PAT, OCI, EPS separately for continuing operation as well as discontinued operation, so that the user will be able to understand. That what is the impact of discontinuing operations? What is the impact of discontinuing operations, right? So user needs to find out that. Okay. And either you can see the complete, you can show the complete analysis on the face of the P&L, or you can show the analysis, in the notes to accounts, and in the P&L you can just show the single line item, right? As I have shown you with the help of Hindalco Industries annual report as well. The right and the better disclosure is the, please show the entire financial performance, I mean to say balance sheet, P&L relating to discontinued operation in the notes to accounts, right? So this is what, in a very summarized manner, what we have read, what we have learned in the last 2 classes, including today's class, right? Thank you so much, guys. Thank you so much, students. Stay safe, stay happy, and please revise all these concepts from my PowerPoint presentation, from Excel file, and please solve all the questions from Institute study material. So more than 50-60% I have already covered in my PPT, in my Excel file, but please complete every question from the Institute study material and RPTs. Okay. Thank you so much. Bye-bye. Take care.